His record against Duke, not good, 1-11. Meanwhile, Duke escapes, holding off Virginia Tech 75-73. Auburn upsets the top seed Tar Heels in North Carolina's 97-80. Kentucky beating Houston 62-58, so Kentucky will play Auburn on Sunday. Red Wings do what they do of late. They win. That's right, 4-0. They beat New Jersey, their fourth straight win. A goal and 2 assists from Tyler Bertuzzi. Tigers get blanked by Toronto 6-0, putting up only 2 hits. Spencer Turnbull will try it today for the Tigers in Toronto against the Jays, 3 p.m. right here on the Ticket. And the Pistons on the home court against Portland tonight, 7 p.m. right here in the Ticket as well. At the Ticket Update Desk, I'm Jeff Lesson. For more, 97.1theticket.com.
The following is a paid program. The views expressed on this program are not necessarily those of Entercom Communications, its sponsors, or affiliates.
Good morning. Welcome to the Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage Funding. I'm your host, Harvey Fried. Alongside of me, Harry Glantz.
Morning, Harvey. It's such a green and white day out today, isn't it?
It really is. Although we brought some yellow, maize, and blue in here, we'll talk about our guest here, Sam Mansour. You bring in a couple great gentlemen this morning. You bring in Donald Strom he's a CPA from the Ann Arbor area. Of course, welcome to the show, Donald. Thanks for coming in today. I know this is a busy time of the year for you, so thanks for spending a little bit of time with us. And Jim Williams, certified financial planner from the area too. Jim, you're awesome. Great to talk with you. Great energy on the phone. I was really looking forward to meeting you here this morning because you had a lot to say yesterday. And again, we only have 1 hour to talk all about what everyone's supposed to be doing, setting themselves up for the future. So we got tons to share with you. A little bit of a different show, Harry, because we're going to sort of intertwine what's going on with the accounting world and getting your taxes done, also preparing for your future with a certified financial planner.
Well, we have a strong team here, and when people go to buy a house, the first thing that they should do is they should probably figure out if they can afford to buy a house. And if you have an accountant, if you've had somebody do your taxes and you have a financial planner, you should probably check with them. And then, of course, you call us. We go through the numbers. We get we pull the credit. We check your financials, and then we pre-approve you. Now, if you don't have a financial planner or a CPA, you know what? You give us a call, and we'll run your credit, and we'll take a look at it. But it's ultimately up to you to go ahead and check with your team. Now, we have 2 guys here today, Harvey. One's in the middle of the busiest time of year that you could possibly imagine. He's got an April 15th deadline coming up. I think it's the 16th this year, is it?
No.
It's the 15th, sorry.
It's the 15th.
All right, so 15th is his deadline, and we've got a financial planner here to dispense all the advice and really take away the mystique and the myths of, what we can afford. So I have to ask the question. Everybody says, I was out with an accountant friend of mine last night, and everybody likes to walk up to him and say, what are you doing out for dinner? Aren't you supposed to be working?
Well, Alan's not allowed to go. Is it Alan?
Right,
He's not allowed
supposed to go to dinner.
bite to eat.
So I have to ask you, right now, are you burning the midnight oil? What are you doing?
I'm usually in my office till 10 o'clock every night this time of year.
There you go.
However, Thursday night I did go home early to watch a game.
You saw a game on TV, didn't you?
Right.
That leads me to an interesting question is, even in the mortgage industry, people want to buy homes, but then they're not prepared or they didn't do some of the things that they could have done a couple months before, whether it be putting their funds together, savings, fixing their credit, putting their game plan together. Do you still find that interesting that every year some of your self-employed people, they're at the last minute, they're putting those books together. Meanwhile, you're staying till midnight trying to get them done. You're shaking your head like this is a bad thing.
It sometimes frustrates me.
Okay.
I mean, I sat down yesterday with a self-employed person, and I said, you need help throughout the year. I mean, it's like you come in here with a box full of garbage, and you expect us to put this into some type of good-looking tax report.
Where the IRS is going to knock down the door.
People are still doing that, right? Still people are bringing their shoe boxes with all their receipts and say, here, take care of it. They're still doing that. In this day and age, 2019, people are doing that.
There are still some people that do that, but they're put in our conference room and say, hey, I just want numbers. I don't want pieces of paper.
Yeah, and then, of course, when you use the famous word, if you're self-employed, we're going to put you on extension. How do they react to that?
Some people, once they get used to extensions, they like it. There are others that are adamant. I don't want to go on extension.
Right. Well, don't people understand that whether you're on extension or not, if you owe money, you still have to write the check and pay it by April 15th?
That is correct, but a lot of people don't understand that.
Extension doesn't mean you don't get to pay. You don't have to pay.
You always have to pay.
You always have to pay.
It's an extension to file, not an extension to pay.
All right, let's do this. Let's circle back here. Again, if you want to join the show, we're taking calls all morning long till 10 o'clock. And then, of course, it's going to be sports and basketball and everything great that's going on here in Southeast Michigan. Let's dive into Jim, though. You definitely certified financial planning. It's something we don't do, and we all need to do more of this. We don't sit down with a professional like you. We don't take the time to prepare our lives for the future. It's so important. A couple things we were talking about, too, yesterday was the mistakes that people make, with their finances, so without a strategy. And again, we get it all the time. Hey, Harvey, I just want to pay off the house. And we just in a brief conversation yesterday said, Harvey, just families aren't taking the time to sit down and put that strategy together.
Well, it's true. So often people, as one of their goals is to have a house paid off when they get to retirement. And while that is a good goal to have, some of them do it without planning and saving money for their cash flow. So having a house paid off in retirement and having no money to spend in retirement is not the way you want to do it. If you have a sizable savings and a house paid off, well, that's the best of both worlds, but that's not where most people are.
Yeah, somewhere in between there, too, the reverse mortgage comes into play. Again, the product has changed over the years, but reverse mortgages it used to have a bad stigma about it, but there's no doubt that that's an awesome program for families that might have did it the other way. And again, there's certain reasons why. If you lived in your house for 30 or 40 years, it's very likely that you did pay it off. Of course, a lot of families I know in the Livonia area or in the area that you're from, there's no doubt that families have taken advantage of that. Like you said, they were able to pay down their house. They bought it in the 70s. It's free and clear. Now, grandmas and the elderly folks out there, they're getting up there, 75, 80. The cash flow becomes the problem. So reverse mortgage does come into play. Have you used that product a lot, or do you see that coming into play a little bit more nowadays?
I haven't used it a lot, but I have suggested it from time to time. And just last week, a client, they've got a 5-acre horse farm. Well, their horses are all gone, and they just love this place. But they're getting to the point where they say, well, I don't think I can afford to stay here. And I said, well, you can. If you do this reverse mortgage, that'll be a way for you to do that. She says, well, I don't know if that's what I want to do. Maybe I want to downsize. We've been having this conversation for 5 years.
Yeah.
So it might get to the point where she says, well, I'm just going to sell, or she might do the reverse mortgage.
Yeah,
it does fit sometimes.
Yeah, today's reverse mortgage isn't like the reverse mortgage of 10, 12 years ago. 10, 12 years ago, it was a little bit, there was a lot more, it was a little bit more, there were more questions, and we just never took part in that type of mortgage planning for people. Now, the last 4 or 5 years, we've taken a look at it. We deem it is a proper tool for some people when they retire. In your case, in that person's case, it could be for them. But you have to be certified, a reverse mortgage expert, and we have a person in our office that we have certified. We do not open it up to everybody. This is not, unlike a lot of programs that have been mass marketed throughout the years that were dangerous financial products. This is not mass marketed through our office. So we take that extremely seriously, and people have to go through counseling. They have to take a class, and we have to make sure it's the right program for them, because what comes up is just as you said, is it the right program? And then their family wants to know, are mom and dad really secure with this type of transaction?
We got a lot more family members involved in that transaction because of the fact that a lot of what happens is, as we get up there in age, of course, and sometimes the social security income's just not enough, and then they're reaching into their IRAs. Well, the kids are thinking, oh, wow, one day I'm going to get my chunk of change from my parents are going to leave me a whole lot of money.
Well, I hope my kids aren't thinking that.
They might be. On the other hand, right, if you might have to have it where they're going to get their equity from the house, or maybe they're going to keep and preserve that wealth or that savings. So again, it's all about cash flow as we get into our older age, and again, how much money do we have coming in versus how much we have going out. Lots of things to share with you this morning. Again, 248-539-9797. This is the Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage Funding. You can call us all week long, all weekend long, if you need that strong approval letter at 1-800-LOW-RATE, the best mortgage banker. And of course, Sam, as you know, the mortgage rates have trickled down quietly over the last few weeks, and this has been a really great opportunity for families to take advantage of either refinancing, doing a rate and term refinance, pulling the equity out of their house. And so often, Sam, we're taking clients out of those FHA loans and putting them into conventional mortgages to get rid of that mortgage insurance, that MIP on an FHA loan. Lots of great opportunities out
Very
there.
much so, Harvey. And even at this time, with what's going on and with the rates, like you mentioned, even yesterday I had to leave. I think I left the office like around 9 o'clock at night, and I was able to lock a client that bought a house a couple of years ago, and had a PMI of $169, and the difference on the rate from what he bought 2 years ago was only $37.
Fantastic.
Can't beat that.
Yeah, but how about this? You know, we for years, this is our 19th year on the show, 30 years in the business. We tell people there's a difference between paying off debt and paying off toxic debt. Today in the studio, you have a CPA and you have a financial planner. If you have credit card debt and you have equity in the house, today is the day to call or text or whatever you want to do and say, hey, I don't believe the mortgage guys. Let's call the accountant and call the financial planner. And they're going to tell you their answer after the break.
Well, we got them here for you, Harry. 248-539-9797. The weather says it's getting nicer outside. When we come back, we'll take all your calls. The donut. Oh, welcome back to the show. There we are. 9:15. If you're just joining us, it's the Hardcore Mortgage Real Estate Business Show brought to you by Capital Mortgage Funding.
You almost missed your interlude talking about donuts, Harvey.
We're talking about donuts. Anyways, we're talking about actually meeting people across the country. And again, we're going to be talking about second homes. And a little bit of conversation came up about I was down in Florida, and sure enough, a couple of neighbors started coming my way, Harry. And the one guy made the donuts at one of the local cider mills. It's called Parmentiers. Is that what the one in Northville? Okay. And I'm like, what? You're famous. And here he was down there. Yeah, great place, great place. Anyways, we're going to take all your calls here, 248-539-9797. In fact, we'll go to our first call today. We've got Larry calling in from a cell phone, if we get that. There we go. Hey, Larry, good morning. Welcome to our show.
Good morning. How are you today?
Real good. What's happening?
We just listened to the show, and we're curious on home inspections because my son bought a flip house in Columbus, and the realtors, it's required by the realtor. And the inspector missed about everything he could miss, from a leaky sump pump to leaky plumbing to light switches with nothing at the other end of them. Is there any way to go back on the realtor inspector? My son's had thousands of dollars in repairs on things that any inspector would have caught. How do you know do you have to hire your own or rely on the realtor? What do you do?
Well, on an inspection, that's up to you to get the inspection. And you can't really go back on the realtor. Now, what I would ask you when you entered the purchase agreement, was there a seller's disclosure stating anything wrong with the property? So it's all about disclosure on that. That's number one. Number two is that I'm not an attorney. I don't play well on the radio. Here's the however. It's up to you to go ahead and hire an independent inspector. That's on you. So let's just say in this example, you hired the inspector. The inspector is your guy. He's on your team, and he's working on behalf of you. He goes in that house, and he doesn't find anything, in his opinion, doesn't write in his report. And guess what? You've had all these faulty things go on in the property. Now, again, all my attorney friends out there, please call me up, and let's advise this guy properly. That's between you and your independent inspector. The realtor has nothing to do with it. I mean, if the seller didn't disclose, that's another story. Now you could go back to the seller. But again, I want to open it up to all of our real estate attorney friends. And, I would tell you that it's all about disclosure. The seller's got to disclose on the seller's disclosure. But if you're hiring that independent inspector, that's between you and the inspector.
But, Larry, go ahead, Larry.
In this instance, my son lived in Lexington and was buying this house to move to work.
Right.
And he didn't know anyone in Columbus, so he left it up to his realtor to hire the inspector because he wouldn't even know who to call.
I understand.
So his realtor called the inspector, and to be honest with you, based on what wasn't found from the plumbing underneath the kitchen sink not being hooked up properly.
Boy, oh boy. No, I
don't
understand.
I don't know what he looked at.
Right, but the realtor is just the realtor in this instance, okay? The realtor is just the realtor. Got to take a look at the seller's disclosure, and you got to go back to the individual inspector.
Kyle, what are you doing in this situation? I know you're referring. Are you referring your inspector to your buyers?
Yeah, absolutely. So, I mean, I have a list of a few different ones. And I always tell people, too, if you want to choose your own inspector, you're more than welcome to do so. But these are gentlemen that I've worked with or ladies that I've worked with in the past that I trust them. I know they know what they're doing. Now, not any inspector is perfect, just like anything you're going to do in life. I would recommend, though, call back the inspector. Say, hey, listen, we feel like you missed these things. In some cases, they have certain insurances that can cover some of these things.
Yes.
But that's going to be between you, the purchaser, and the actual inspection company yourself.
Yeah, so I mean, this comes up all the time, Larry. It's a sticky thing, and I mean, we always advise families even before they even get the inspector out there. They're looking at the house, they're making the offer. Turn on every light switch, turn on every plumbing, look under these things. Getting more experienced people on your team is the key, and this comes up because maybe the experience from those people involved in the transaction needed to be a little bit better. Right, as simple as that.
I got one more question for you. We're thinking of selling our house. It's 24 years old. Are we better off hiring an inspector prior to even listing it?
Oh, that's a great question.
I like it. I wrote it down from last night. Unbelievable.
We had that a couple weeks ago, and I don't think that's a bad idea at all. In fact, some sort of
Today, 10 till noon, Stoney from the Jamie and Stoney Show will be at Planet Fitness on Eureka Road in Southgate for the Healthy Planet Challenge Triathlon. Support Stoney as he works to raise money for the Boys and Girls Club of Southeastern Michigan. There will be food, games, prizes, and more at Planet Fitness, a judgment-free zone. Get more at 971theticket.com.
Donate to 97.1 The Ticket Student Heart Check Program, and you might just save a life. Your donation will pay for a healthy heart check for a student whose family otherwise couldn't afford it. Go to 971theticket.com and search Student Heart Check.
The Detroit Red Wings host the Boston Bruins. Pre-game tomorrow night at 7:10 on 97.1 The Ticket.
All right, welcome back to the show. 9:17 if you're just joining us. Yeah, those clouds and rain out there sort of putting a damper on the weekend, but don't worry, spring's around the corner. Got a little taste of it this week, which means home buying season. That's right. Call Capital Mortgage Funding, 1-800-LOW-RATE. Get a strong approval letter. Put your program together and put your whole process together. Put your team together.
So, Harv, before we went to the break, we were talking about, what rates are going to do, toxic debt versus non-toxic debt. You don't want to use your house as a piggy bank. Rates are low. What do you do? So we've got two guys here. We've got an accountant and a financial planner. And for years, gentlemen, we've said that if you've run up your credit cards and you don't plan on running them up again, that's the key, right? You don't want to run them up again. You should go ahead and trade in that 18 to 22% revolving credit card debt for 4 to 5% mortgage credit or mortgage interest rate and roll that debt into your mortgage. Guys, this is the magic question. What do you think about that? I don't care who takes the question first. Everybody out there is listening. They want to know, is that a good idea? Now, the caveat is you can't run up the debt again. But if you pay it off with the lower interest rate number, is it better than keeping that credit card debt out there?
Yeah, go ahead.
The one thing that you are when you're doing that is you are trading non-deductible interest for deductible interest. So, I mean, there's a few pennies tax savings.
Let's talk about that. The new rules came out for 2018, the new tax code with the new administration. And let's clarify there. I actually had a ticket text last week. And if you want to ticket text us, we would rather get a phone call from you. That way we can communicate and answer some questions at 97136. But I had a ticket text and it said, what are you talking about? They changed that. But you and I cleared the air on that. It's a tax deduction. So in a different way, though. Explain that a little bit.
The itemized deductions as they exist are still in effect. By the way, because most of the people that come to me are high-income earners, they're still itemizing their returns. The standard deduction was raised. There are more people that are using the standard deduction as opposed to the itemized deductions, and if they're not getting the benefit of that, it's because they're below the limit.
And that limit is what?
$24,000 for a married couple, $12,000 for single.
People are using the standard. They're doing the deductions, though.
Yeah,
they're coming in with a laundry list. They're bringing the 1098 statements and saying, get me some money back.
I tell people to go through, add up all the deductions. You don't know if you're going to be able to itemize or not. Don't presume that you can't.
Okay. That's good stuff. Sit down with your CPA sooner than later and clean that box. Get that box organized. Go get some paper clips, some staples. Go see your CPA a little bit more organized than last year. That's always good stuff. 248-539-9797. We're going to take your calls all morning long here as we continue the conversation about potentially using the equity in your house. I mean, it's been tremendous opportunities here. Again, things really stunk here from 2007 until about 2010. The economy tanked. We know it. We all lost a lot of job loss here in Southeast Michigan. If you were in the automotive industry, we needed a government bailout. All those things are well behind us now. And hey, it's just a matter of timing in life. You might have bought a house in the last 5 to 8 years, and Sam, they have so much equity in the house. Again, whether you're refinancing the house to get rid of the mortgage insurance, drop your rate, drop your years, taking some equity out of your house to do those home improvement projects or pay off those credit cards is just dynamite. The savings are dramatic. And some families say, well, here I am, my mortgage balance is going up.
Yes.
The savings are usually so dramatic, $300 to $500 a month, that if you wish, once you get all back on your feet, go ahead and pay down your mortgage. There's no prepayment penalty on a mortgage.
So, Harvey and everybody, people are going to make the same mistakes they made 2 years ago. Now, rates are the lowest they've been in over 467 days or something like that. So you just do the numbers. Doesn't matter. They're lower than they were in the last year and a half.
About 14 months plus.
Okay, so what's going to happen is that people are going to sit there and go, well, I'm going to wait for them to go down more. All right, listen. I'm going to tell you, you might have heard somebody say this. They're not going down to zero. If it's lower than you have now or the same that you have now, and you can go ahead, you could take money out and you could save money. The whole thing is, can you save money? And you have to do the math. So we're really good at doing the math and showing you your options. You could take a 30 down to a 20. You could take a 20 down to a 15. You could take a 30 to a 15. Okay, you could take cash out.
The timing couldn't be any better, Harry. I'll give you a scenario that I'm doing right now. We're paying off the mortgage, we're paying off the HELOC, and we're paying off 5 credit cards, and their payment is $400 less.
Bingo.
Right. So, but you can't sit there and you can't worry about, is it going to go down another eighth? Is it going to go down another quarter? Because here, this is a rule in mortgage banking and interest rates. They always start to go up faster than they come down. So right now, good news is we're sitting here on a Saturday. Call your mortgage person. If you've been talking to them, call them, have that conversation, because everything starts over on Monday. All right, the rate on Friday, Monday's rate could change. The rate Monday is not going to be the same as on Friday. This is a commodity, okay? Things change like the stock market every day. It might not be the same rate, all right? So you got to lock it in. You got to take advantage of it. If you're doing a cash-out refi, I would suggest that you go ahead, and that's really taking equity out of your house to pay off toxic debt, but you cannot run that debt up again, or else you're using your house as a cash register.
I almost want to send all my clients by, I don't care what age you are, I almost want to send them all by to Jim this week. Jim, maybe we'll just do a whole bunch of appointments. You don't mind meeting people. There's no charge to sit down with you and spend a little bit of time in an afternoon with you.
Are you giving away his service right now?
I'm giving away his service. I did. Maybe you got to bring him something.
Of course, I always meet with people and give them a chance to explain their situation, and find out if they're a good fit. I mean, they need to be comfortable with me. I need to be comfortable with them, and see if there's something I can do to help them in their situation.
Insurance
planning. That's why Jim's on the show. Okay, same the reason Don is. You know what? All you have to do is call somebody, meet with them. If they fit with your philosophy and you like what they have to say, and your goals and objectives match their financial planning and accounting strategies, that's a fit. There's nothing, it doesn't cost any money to figure that out. We talk about that every week. You have to figure out people's goals and objectives, and then you have to see if it works. You have to have that plan. And the only way you could do that, again, you can't do it over the phone, meaning, I'm going to sign up with Jim and Don on a phone call conversation? Maybe, but probably after I sit down with them across the desk, check them out, make sure that their office isn't on wheels, and I want to see that they're real. But that's just old school.
All right, we're going to take all your calls here this morning. If you're just joining us, it's the Hardcore Mortgage Real Estate Business Show brought to you by Capital Mortgage Funding. Bringing some more interesting information here, of course, as we bring a certified financial planner, Jim Williams, and a CPA, certified public accountant, into the office this morning, Donald Strom. And it's great to have this intelligence in the and just sitting here this morning. And
what are you saying?
I'm saying we're mortgage and real estate guys.
Oh, yeah, okay.
But here, on the other hand, it was really a fun month, Sam, and I hope you had a chance to have some really fun closings. Yesterday sort of wrapped up our month of purchase closings, all the transactions, unless you refinance your house today. March was a really strong month, and if you're thinking about getting out there into the housing market, open your eyes and get some really great people behind you. I had the most amount of fun in the month of March, and I had some great clients. They were receptible. We sat down. The lady closed yesterday. I want to thank Bob. She's wonderful. She sent me the nicest email. She put the word friend in there, Harvey. We are now friends for a lifetime. Just great communication made for a wonderful transaction. She had looked at a couple different houses, and this happens to many people. Inspected them. A couple of them had question marks, foundation issues, maybe some water issues on another, and then finally found a great house to fit her needs, and again, closed 20-some days later, and it was just really nice to sit down at a couple closings yesterday. There was some real buzz going around. I was at these real estate offices. So, again, if you're thinking about home ownership, be sure to get a strong approval letter, put your plan together, and give us a call. We'll be right back. 248-539-9797. Keep it here.
Hi, Harry Glantz and Danberg for Capital Mortgage Funding. We do loans everywhere. In Southfield, in Birmingham, in Royal Oak, in Grosse Ile, in Detroit, in Canton, in Northville. No matter where you live, we want to do your mortgage too. That's Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker.
Alrighty, welcome back to the show. It's 9:30. You're listening to the Hardcore Mortgage Real Estate Business Show. Yeah, just for another 30 minutes or so. Now we're going to have Pat Caputo coming in with sports all day long here on 97.1 The Ticket. Keep it here. Lots of great stuff. We got about another 30 minutes or so. We take your calls. 248-539-9797. We brought in Kyle Lang from RE/MAX Dream Properties. Of course, they got the Northville, South Line, Livonia office. He works anywhere in Southeast Michigan. I'm really enjoying all our conversations. If there's someone in the office just like you, can you introduce them to me? Because I'd like to.
There's only one me.
There's only one of you.
Oh, boy.
Okay, so we'll go. In that case.
Boy, I bet your mom and dad are happy about that.
I met his younger brother last weekend. There's two of them.
Oh, there is two of them. Hey, let's roll out to William out in Richmond, remodeling to improve value of your house. William, good morning. Welcome to the show.
Hey, how you guys doing this morning?
Really good. Thanks for calling in. What's happening?
Sure. So my question for you is, I have an older home, about 130 years old. I still have a lot of like a log that has joists in my basement. And we have a company coming in a couple weeks. We're doing we're basically replacing all the foundation, all the joists, load-bearing beams, footers, all that's getting redone.
Yeah.
My question for you is, obviously that has to be done because it's an old home, but what does that do for value? If it does anything for value, or do I just have to get it done to get it done?
I mean, it's going to keep the house going. I mean, I don't think adding new, beams and foundation and joists are going to really add anything as like sellers coming in and saying, hey, this is an upgrade. It's like a new roof, right? You already have a roof.
They
put a new roof on.
They expect that when you buy a house.
Yeah. I mean, it's going to help sell, right? It's going to be a great selling feature that is going to help say, hey, this house has more durability because of what we've done. It's not going to fall apart on you. So I think, yes, you have to do it. It's going to help you sell when you're ready, but I don't think it's going to add a ton of value.
Any certain value.
Okay, I was just curious. I figured that was the case with it.
Hey, Bill, William, you're gonna stay there? Obviously, you're doing the improvements because you're staying in the home for a while, right?
Yeah. We're not planning on going anywhere anytime soon. We're doing basically a full remodel through the entire house. I just have to do this before I can move forward with anything else.
Just curious, what type of dollar are you looking at to complete the foundation, the joists, and all that? What is it?
$18,000.
Yep.
I'm doing the electrical and the HVAC myself.
Okay, well, good. Hey, congratulations. You're doing the right thing. You obviously enjoy the older home. It's got the charm, and they can't make them like that anymore. And I think what you're doing makes a lot of sense. So often we'll run into families that have to sell that 130-year-old home or that older home, and they haven't kept up or done these repairs, and they don't get anything for the house. So it's quite the opposite of what we would want. We definitely want you to do what you're doing.
Yeah, absolutely. I had a client actually just recently.
Thanks a lot for the call, Bill.
Just a client out of the state of Michigan. So that's one of the cool things about working for a company like RE/MAX is we're able to help people all around. And I had a friend that they were buying a home in Indiana, and it was an older home like that, and there were some foundation issues, and it wasn't able to pass city inspection because of the foundation issues. So that current owner had not put that money into the house, and it ended up costing him the ability to sell the home.
Well, we had a little bit of a slowdown, as Harry mentioned, just for it's like 3 weeks in there. So maybe someone turned off the faucet around December 10th or so. But things are jammed.
Download it today and listen to us anytime, anywhere.
97.1 The Ticket.
All right, welcome back to the show, 9:30. If you're just joining us, of course, the Hardcore Mortgage Real Estate Business Show in our 19th year here on 97.1 The Ticket. Taking all your calls, 248-539-9797. Definitely want to hear from you. Hey, call Capital Mortgage. We've got a full staff all weekend long. Get that strong approval letter. Sit down with real mortgage professionals. Hey, I got appointments later today. I got them tomorrow. This time of year is when it rocks. And, Sam, you got to have your ducks in a row. You definitely have to have that strong approval letter, the plan, understanding all the different mortgage options that you might have. The competitive bids are out there. We've had nonstop real estate agents. We had about a run here where we had agents on the show every weekend, and they're coming back again next week. And so I think we're going to have a home inspector on along with some real estate agent conversation. This is what's going on right now in the housing market, Harry. These home inspections are coming up with some things because we live in Michigan. Boy, oh boy, our septic fields are all old, and so are our sewer lines.
Yeah, the properties are getting, there's going to be more and more little things wrong now. So we have to go ahead and we have to decide, are these little things worth killing a deal or not? I say no, but you have to get the list of items. You have to look at the seller's disclosure. You have to make sure that they've listed those things. You send out your inspector. It's up to the buyer to hire an inspector. I'm not big on waiving an inspection. Anybody who's listening to the show knows I do not like to waive inspections. So you have your inspector go out there. They go through the list. They go through the house with you, and they tell you everything that could happen. Big things, right? Furnaces, roofs, foundations. All right, those are all
heating and cooling, the electrical systems,
right, all of those things, plumbing. You have to take a look at those things, then you have to decide, what are the costs of these items to get fixed? And once again, you sit down, you have a plan, you have to do your math. Now, most basements in Michigan they have water, they have dampness, they've had a sump pump that didn't work, that went off, that didn't go off. But you have to check out all these things, and then you have to decide, is this worth buying the house or not buying the house? In most cases, these are fixable items. In some cases, cracked foundations, you have to get the jacks in there. There's all these kind of things. But the inspector will let you know.
Yeah, win-win situations on always. You feel comfortable when you're signing at the closing table. So get those proper inspections. And one of the things we talked about here is these smaller things. So I love the idea that all the inspectors are willing to have you walk through. So here, you hire the home inspection. Don't go to work. You have to go to that home inspection. Not only will they show you things about the house, they'll show you the functionality of things. So they'll show you where that main water switch is, where to shut off the water if that ever becomes an issue. But they'll show you different things about the furnace and the electrical panel and interesting information that really pertains to your house. Also, the venting in the house and the basements and how humidifiers work and when to turn them off and down. So there's many things to know when you're purchasing a house on the mortgage side and definitely on the real estate side. There's no happy button to hit, Harry. That's the one that really irks me. I received from my own cousin, who's in his 20s, and he's a smart guy. He had to call me 25, 30 times. I told him to call me more. So if he needs these questions answered, doesn't everyone else?
And you have to check everything else. You have to turn on the appliances to make sure they work. How about flushing the toilets? How about turning on the water? How about going in and opening that oven and making sure it's not all rusted out? Okay, you've heard that story, Harvey?
Oh, yeah.
It's true.
Yeah.
Dishwashers, hooked up, aren't they? Are they not hooked up? Are they functional? All right, come on. This is all part of buying a house. And sometimes I know the inspecting world doesn't want to hear about it, but sometimes they miss things.
Yes, they do.
But, you have to take a look at things. Just buying a house isn't just saying, I like it. All right, let's move in. You got to check these things out.
All right, let's sort of circle back here to our guest. We got Jim Williams in, a certified financial planner. It's been around a very long time, since the early 80s. and really fun to talk to. Jim, of course, one of the things we talked about yesterday is retirement income planning, how health, disability, long-term coverage, but that's starting to creep into our lives now as a lot of us, hopefully, God willing, are going to live a little bit longer. A lot longer.
Well, what do you got? You got plans to go somewhere?
No, I said a little bit longer than in the past.
Oh, okay.
But there's no doubt that you have to set up yourself for the future. And that's what it is, that long-term health care. We're getting more and more of that. But not only for us in my age in the 50s, but more so for my mom and our parents moving forward. How do we help them and get them to that point?
Well, longevity is an issue, both from a health standpoint, the amount of money you need to budget for just health care in retirement is a lot larger than most people think. And those costs are only going to be going up as our population ages. More people, 10,000 baby boomers a day retiring.
Wow.
Getting onto Medicare. So those rates will have to go up. But yeah, the long-term care planning, that's another huge issue. And a lot of people think that Medicare will take care of them, and it doesn't. It's Medicaid. And Medicaid, you have to spend down all of your money to about $2,000. So whatever you have in your 401k plan, your retirement plan, I mean, you have to spend that down before Medicaid is going to help you out. And then, you don't have a choice of where you're going in a Medicaid facility. They just kind of place you. So, you're not going to be on the assisted living on the lake.
With Medicaid, right? With Medicaid, so that's the difference. We were talking about it at
It's
dinner
quality of
last
life.
night. It's Medicaid and Medicare. You want Medicare. You don't want to be on Medicaid.
Yeah.
If
Some
that's
people plan for Medicaid, as
a backup.
That's not their plan. It shouldn't be your plan. And the cost of long-term care averages $7,000-8,000 a month. So
Holy moly!
So how long would it take you to run through your retirement savings with that? And if you're pulling it from your IRA, which is where most people have almost all of their retirement savings, when you pull out $7,000, you're not just taking $7,000 from your plan, because there's taxes on top of that. All that money you have in your IRA has never been taxed. So put another 20% or so on top of that. So you're taking $9,000-10,000 out to get that $7,000 to pay for that long-term care. So that kind of planning is really kind of critical. And people are living healthier lives, so they're living longer, which means that they're going to have a lot more probability of living some of that in a nursing home.
Right. So this is turning into my father's financial planning and accounting show, Harvey. All right. Right. So here's the question that I have. So how many people are coming to both of you and saying, you ready? Do I take Social Security at 62, 66 and a half, or 70 and a half?
Yeah, I get that question
all the time, right? You get it all the time.
Yeah.
Harvey, you familiar with that question? You don't even know?
Again.
All right. So I will tell you again, and I think without having people drive off the road in boredom, you have to sit down and you have to take a look at your individual situation and you have to do the math. This is what I was doing last night at dinner. Isn't that fun? And watching the Michigan State game.
Apropos, here we go.
So, anyways, I think these are all part of bringing your accounting team and your financial planning team. And watch this, everybody, that doesn't have a financial planner and accountant. We can help you and put you in touch with people that can help you make those decisions at absolutely zero cost. It will not cost you anything. So I'm not giving away their services.
Okay.
I'm telling you the services that we can provide and get our team involved and help people out. So if you want to call us at the office, 1-800-LOWER-8, 248-569-7283, or email us. It's hfreed@lowrateonline.com or hglanz@lowrateonline.com. We will go ahead and make sure that you get the proper information for making the proper decisions, and it will not cost you anything. So that's part of the service that we offer. We want to be part of your financial well-being and be on that team. So don't do anything. Don't write a check if you don't need to, and maybe we can help. Keyword is help. Put you in the right frame of mind and help you make these decisions. But ultimately, you're going to make that decision on your own. I'm not going to tell you what to do, but I'm just going to give you that information.
This stuff, Harry, about being a grown-up, it's really big stuff. It's you think you just want to cruise through life and everything. This grown-up stuff really is important.
It's real stuff.
I don't know what happened. I felt like I was in my 20s a couple years ago. Now I'm talking about all these other things. But yeah, time does fly, and before you know it, you got to be set up for the future. And it doesn't mean you have to. It's not only for rich people, wealthy people. In fact, it's more so for the families that are lower to middle income, so that they can sustain and have a wonderful retirement and a great quality of life. And some of the kids out there think, oh, it's fine and dandy. But if you don't take the time to grab your folks that are maybe in their 60s or 70s or even older than that and sit down with them, well, good. Then go ahead and build the ramp outside your house, because they're going to be moving in with you. They're going to burn through their money, and they're going to need a place to live. And that's what, again, depending upon what your lifestyle is, these are the things that we want to prepare for in the future.
The mistakes that people that are moderate with their savings, the mistakes that they make are more serious than someone that does have substantial assets. So,
well, there's less margin for error.
It's less margin for error, and it's critical that they don't make bad decisions. And I'm sure Don sees this all the time, but I see this. People, you don't know what you don't know in the financial services world, and people make so many mistakes just because they don't know. And in this world of internet and everything you could ever want is available online. But figuring out how it applies to you, that's a little different situation.
Yeah,
and that's what we're here to help with.
Yeah, the internet's a great place, like you said, a great resource to start building your knowledge bank up, and then try to sort of figure things out that way. But then sit with the professional and then put it all together that way. It's the same thing in the mortgage world, or if you're purchasing a house, you start a little bit on the internet, you get some professionals involved, and now you get your team together.
Talk to people out there. Get all the information you can possibly get.
All right, 9:40 if you're just waking up. It's the Hardcore Mortgage Real Estate Business Show. 248-539-9797. All your calls when we come back. Welcome back to the show, 9:45. It's the Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage Funding. All day long, you can find us at the office at 1-800-LOW-RATE, the best mortgage banker. A whole bunch of us are headed out to the Cottage and Lakefront Living Show. That's out at the Suburban Showcase out there in Novi. Really fun stuff. John, there's a boat show there. Can I keep you in the booth?
Oh,
you're going to be shopping for boats and stuff.
We're going to be shopping for Becky will be out there. Becky Alley from our office. Go see the gorgeous Becky Alley.
There you go.
She'll be out there at 10 a.m. And then Harvey and I will be there from 1 to 5. Come see us. Say hi.
Not so gorgeous, but loud. We'll be there.
Oh, we're not gorgeous. We're hard to look at. That's why we're on the radio.
That's good.
Yeah, faces for radio, gentlemen.
But it's also about second homes, Harry, too, which is fun stuff. Vacation homes and second homes. It's a really fun show.
Listen, up north in the Lower Peninsula and the Northern Peninsula of Michigan, with all the lakes, you could not find a better place to have a second home. People go up north. We talk about, here we use the term, where are you going for the weekend? We're going up north. Up north. That's what we do.
And no one ever asks where up north is.
We know, up north. Yeah, where are you going up north? Okay, that's how we talk around here, because it's such a big part of our, growing up and our lexicon and just our lifestyle. So we're exhibiting at the show. And I think we're going to meet a lot of people out there. It's going to be fun. There's a lot of other exhibitors out there. Come out and check us out. It's at the Suburban. Is that where it's at?
Yeah, they call it the Suburban Showcase out there collection.
Yeah.
And
what do I know? I just know how to get there.
It's a big building. What's also cool about it is, and you see this with a lot of situations, is, when you buy a second home, John, not your family necessarily, but more and more families, they do rent them out on occasion. So it could be a second home with your family, and you're buying it as a vacation home. 10% down is all that's required. And then you might find that you rent it to friends or family. And this is what people do in the future. And again, if you buy the right property, whether it have some lake privileges or just in the right area where you can maybe even walk to a little downtown area, you generally can do pretty well on these. Again, if you have the money, it's something you want to take a look at, we'll run the numbers for you. If it makes sense, sometimes you can grab 2 or 3 families can get together and buy these. But this is what we see this time of the year. You get a little taste. If you go up north right now and you get a little taste of it.
Hey, families for years and years have gone up north, and they've found these vacation homes, these cottages, and John has one. And he spends a fair amount of time up there. But the best part for me is watching John when he takes his brother up there, when he takes his nieces and nephews and everybody there, and they have a great time on the lake, and you're just hanging out. that's what you do. You just kind of hang out and you create those lasting memories for families up there. And in the summertime in Michigan, no better place than being up north.
I mean, it's so hard to get everyone together at one time anymore that if you have a place that you can all go to and just relax and the kids can run around and nobody has to be stressed out, it just makes for a great time. And, it changes your family dynamic from family to now you're all best friends as well. And that's the most important thing for me, that, you get out there and you get to spend some time with your family and friends and just, make memories.
Yeah, get to suck in some fresh air up there and maybe get, defuse a little bit. Yeah, the pressures of everyday life here in the hustle and bustle of Southeast Michigan, it can catch up with you.
Not to mention the awesome golf courses up north.
Oh, yeah. So we got laser golf.
Well, and like you said, Harvey, you can take one of those properties and rent it out for one of the busy weekends or a busy week, and you can make your mortgage payment for 6 months.
Yeah, you're seeing a lot of more and more of that happening. Hey, Kyle, a couple things I wrote down there front. Of course, the pride and joy of Plymouth High School here, Kyle Link from Remax Dream Properties. Kyle, I know all your friends are listening. So how do you get on 97.1? Here's how you do it. You become a successful real estate agent. You work hard, honest, and all those great things that you do. What do you like most about being a real estate
Hang out in the Miller Lite Brew and View Outdoor Pub and watch the game on the big screen on the east and west sides of Grand Circus Park. Interactive games for fans of all ages. More food, more fun, more merchandise, more music, and of course, more beer. The only thing that isn't more is admission. It's still free. Everything starts at 10 a.m. First pitch at 1:10. The opening day block party. Grand Circus Park, sponsored by Sunbelt Rentals, Power Home Solar, Curewell IV House, and Miller Lite. Get more at 971theticket.com.
The Tigers home opener is just 5 days away on 97.1 The Ticket.
Alrighty, welcome back to the show, 9:45. It's the Hardcore Mortgage Show, brought to you by Capital Mortgage Funding. I actually call it the Hardcore Mortgage Real Estate and Business Show because today we're covering a little bit of business as we got a CPA in, Donald Strawman, and lots of questions to answer out there, and a certified financial planner. We brought in Jim Williams, so a lot of fun if you have any questions like this. And we're going to go to our call here. We got in from Livonia. Bill's asking a question about potentially interested in refinancing something somewhere. Bill, what's your question?
Yeah, hi, good morning. I just bought a home 2 years ago at 4.25%, and I'm getting a lot of offers lately at a lower interest rate, and I'm just wondering, should I do this, and what should I look out for? I don't know a lot about this.
Yeah, Bill, when you say you're getting a lot of offers, are these coming in the form of email, calls? Are you getting solicited? Are they from people you know, the people you don't know? I mean, tell me a little bit about that. And then second part of the question is, when they're saying they're offering very low, are they offering with costs, with points? I mean, give me the range, because there's a lot of bad information out there. It always happens, all right? In our industry, the behavior can be crazy that if you're not dealing with somebody that you know and you trust, you're going to get so many phone calls and so many email telling you some bad things. I just want to know what they're talking about.
No, I don't know these people, and I'm getting low offers like 2 and
Yeah, no.
5%.
Nope. Go ahead.
Yeah, Bill, what we keep seeing is, there's no doubt rates are low. You have a great interest rate. Let's clear the air. Is that a 30-year mortgage you have at 4.25%?
Yes.
It's nice. It's very good.
It's really good.
It's very good. Now, let me tell you why you're getting. There's always a why behind everything that's going on. People are pulling mortgage records right now at the county, and they're compiling lists, or they're buying lists, and they're gathering the data, because rates are right now the lowest they've been in a couple years. I said over a year and a half, in that range. So they're going ahead, and they're taking a look, and they're pulling all the information, and then they're mass calling and mass emailing. My point is that if you don't know these people, what did your mother tell you about strangers? Don't talk to strangers. Strangers are dangerous. You need to talk to people. Whoever did your mortgage, all right, is the person that you should be talking to. That's your first call. Okay? I'm a big believer in relationships. So you call that person, that guy or gal, and you say, hey, listen, I've been getting all these crazy calls. What should I do? I'm glad you called us. If you want to call us, we'll talk about it. Harvey and I can go over it with you, and we can take a look at it for you, and it won't cost you anything, and we will give you some solid advice. Right this second, Harvey told you it's a great rate, and maybe you should think about doing nothing. I share that. The rate you have is a nice rate. If there's something other that you're trying to accomplish, pay off debt, anything like that. Maybe there's some equity. Maybe we could take a look at that. But on its surface, a 30-year fixed rate right now at 4.25 is a very solid rate.
And again, Bill, you're 2 years into it. To take you back to a 30-year, to charge a whole bunch of fees, maybe to trickle your rate down.
If you weren't saving any money.
Yeah. I mean, the math at the end of the day always tells it gives us the answer. But I think, as Harry said, let's go to whoever gave you the mortgage. You trusted them. I like the 4.25 you got, even if it was a couple years ago. I would start with them, and then you've got us. I'm going to follow up with you after the show. More than welcome to send the quote to us, show us the numbers. If we could do a whole lot better, we'll make you an offer, and if we can't, we'll wish you the best of luck. Bill, one question I have. Do you have any interest at all of maybe dropping the term down to a 20 or a 15-year?
No, not at this point.
If you like the minimum payment that you have now, you might just be all set with what you have.
I think it's great, but he's right. People are they're coming out now. I've seen craziness.
Thanks for the call, Bill. We'll follow up with you.
30-year fixed. Okay, no point, no cost. See, everybody out there, that's a hook to get you to call. All right, do not give them your credit card over the phone. Do not write anybody checks. Do not pay people money. All right, don't do it.
Harry, I literally saw a quote just really 2 weeks ago, and it's really where the rates are today. But because 2 weeks ago the rates just started to trickle down, it would have still required a few weeks ago a couple discount points. Oh boy, these closing costs were between $8,000 and $12,000. I had a couple of different ones, but again, folks, you have to understand that even if you're not coming out of pocket at the closing table, there's a difference between a zero cost and you coming out of pocket with nothing at the closing. And again, if they're tacking on to your existing loan amount, that means you're going sort of backwards. Now, it doesn't mean it's not a good move. It could be a great move for you, but the math never lies. And the idea is to sit down with some professionals and take a look at all the numbers.
Don't write checks and give credit cards over the phone to strangers.
It can
never a good idea.
Yeah, not at all. And we have some great local lenders. Of course, we love you to call Capital Mortgage Funding at 1-800 Low-Rate, the best mortgage banker. Then you're dealing with a mortgage lender that's been in town a very long time, over 28 years. So that would be a good idea to start. Hey, let's move off to Brian here. Brian, you're calling in from Whitmore Lake, and you got a question about buying a home in Myrtle Beach. Oh, there you go. Hey, Brian, what's happening?
Too much. How you doing today?
Real good, sir. I love Myrtle Beach. What are you thinking?
Well, I mean, just as an investment, I have a home here in the, Ann Arbor area, Whitmore Lake, and just as an investment, getting a condo in Myrtle Beach and whether it's a good idea to pull money out of a 401 to do something like that, or just trying to, something I've always wanted to do. So just trying to get some ideas, some feedback.
Jim Williams, he's going to enjoy this too. Brian, you're thinking about enjoying this place too, and then when you're not there enjoying it, you would rent it out and sort of recoup your money on it.
Exactly.
Yeah, I mean, that's so many people do it. Jim, what do you think about this in general?
Well, generally I say not to take money out of your 401k. That is your retirement. And so you do need to make sure that you're going to be able to pay that back. If something happened, you lost your job and you have a loan, you're going to have to pay that back right at that time, and that can cause a hardship. There are certain reasons when taking money out of a 401k do make sense. The first-time home buyer, it can be good for them, but in your situation, it's not your first home, so it would have to be a 401k loan. So there are some regulations on how long you can take that out before paying that back. And then there's the idea of, can you be a landlord? Is that something that you want to do, or you're going to have to hire somebody to do that? There's a lot of things to consider when you do, in looking at what you're looking at.
Right. Hey, Brian, the one particular place you're looking at, I'm guessing there's a management company, and they got all the numbers to show you how this is successful for all the other people that are the owners in these complexes. Is that true?
Yeah, exactly. There would be a management company that takes care of it, for the most part. And of course, there's a fee associated with that. That's, that's rolled into your I think it's your HOA cost.
Yep, your homeowners association fees. Yep.
Right. Right.
I think it's a great opportunity if you're going to enjoy it, and they already have the platform, and they can show you the success stories of people that have invested in these. And one of the things, Brian, is you only need to buy a second home, which is, people think you need a ton of money. You only need 10% of the purchase price. So yes, you can buy 10% down a vacation home anywhere in the United States, whether it be up north or pick another state like South Carolina or down in Florida, Arizona, wherever you might go. So I love the opportunity, Brian. And again, if you're financially pretty sound,
it can be a good move.
Yeah, it could be a great move. moving. Not only that, we get one chance on this side of the grass. Why not enjoy a little bit? Sounds good to me.
Yeah, exactly.
All right. Well, good luck to you. Hey, we got qualified people all around here. You can do your mortgage right here in Michigan and deal with some people that you might even know. So we'd love to follow up with you and see if we can help you.
All right, thank you.
So that's not an unusual situation what he's trying to do. Okay, so he's looking at a vacation home. Okay, he's going to buy it as a second home, and then when he's not there, he's going to rent it out. So first of all, he's got to make sure that he wants that aggravation. Now, like you said, it can get aggravating being a landlord. However, if he's going to buy it in a community where that's normally done, they probably have a management company that's going to take a look at it. So his maintenance on that, his thought process could be a very easy one. Also, I liked your advice about taking the money or not taking the money or checking it out, about taking it out of 401k. I like it. I think that's somebody's retirement. They're saving for that. But also, I will say there is a little bit of the flip side on that. He's borrowing the money from himself. Okay, not a bad thing to borrow. You know, you're financing your own, you're borrowing money for yourself, but there are rules how long it has to be paid back. There's a time frame that it has to be paid back, and that time frame is what?
I believe it's 15 years when you take it out for a mortgage, but most 401k loans are 5 years.
Okay. And I know that I had a situation in the past where I did take a little bit, and I was able to pay it back either through my paycheck, and I was paying myself back. And then also, if I wanted to pay it back, I could pay it back in one full amount. So that's what I ended up doing. But, yeah, I mean, you can use your 401k with the advice of professionals to maybe, like you said, buy your first house.
But, again, if you lose your job, then you're going to be forced to pay it back then, or you take it out as a distribution, could be penalty. You know, and taxation if you can't.
The one thing I would add,
buyer beware.
I would add to Jim, he better give serious thought to how stable is his employment situation. Okay. If he's in a company that's laying people off, I'd strongly advise, because I've seen this too many times. People do that, and
that music says that's it. Are you kidding me? Honest to God, is that it? I thought we'd at least one more say. All right, guys. To all our listeners out there, we want to thank you for listening. It's been a version of the Hardcore Mortgage Real Estate Business Show. Want to thank our guests for coming in. Donald Strom, certified public accountant. You need to get back to work. I know. You're going to be there all night tonight. We'll send you something over there to keep you up. Jim Williams, certified financial planners, and having CPAs in here and all this intelligence. Gentlemen, thank you for coming in. Really appreciate it.
Thank you very much.
Again, 1 hour is not enough. So if you want to meet these guys, call Capital Mortgage Funding. We'll get you set up with these kind of true professionals. Most of the time, there's no obligation at all. You can sit down with your family members and really put a plan together. Sam Mansour, thanks for bringing them in. Always the great Sam Mansour, who's handling mortgages again all around Southeast Michigan. Sam, thanks for bringing these fine gentlemen in.
Don and Jim to come down.
All righty, we got Pat Caputo outside with sports. Keep it here on 97.1 The
Thanks,
Ticket.
everybody.
For Harry Glantz, I'm Harvey Free. We'll catch you next Saturday.